Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Yang, thank you for coming on today.
Happy to be here.
Well, starting a new week here, last Friday U.S. stocks were down as the coronavirus wipes out jobs, but the figures are pointing to a higher open on Monday. The Korean markets today closed significantly higher. What's the story in the global markets?
Okay, well, the markets other than the United States seem to be in sort of a holding pattern. It's going a little bit upwards, but it's more of a roller coaster. And there's good days and there's bad days, and Korea seems to be no exception. But the United States, for the last 10 days or so, it's been steadily going downwards, and that's because I think the United States, the COVID virus situation there has gotten steadily worse, and even President Trump is now counseling the people of the United States that the situation is going to be very, very bad. Now, the reason that all the global markets other than the United States seem to be doing well is that the government and the central banks have really been doing a lot to take away the risk from the financial system. So most of the advanced countries' central banks have now offered to buy various non-government bonds so that they could provide liquidity to the financial institutions. Some central banks like the United States are even buying private bonds, and all the central banks are doing everything they can to put as much liquidity into the system. One of the things that putting so much liquidity, i.e. cash, into the system is that it actually reduces the risk for the private institutions. But sort of a bad news in this is that it's the government and the central banks which are assuming the risk. But current situation with the global recession, possible depression, I think the governments and the central banks do not really have a choice. If it was left solely up to the private sector, they would not lend at all. We would be experiencing a credit crunch. So we're in sort of an unavoidable situation where the government is taking all the risk. And because the government is taking all the risk, a lot of the private risk has been disappeared. And that's, I think, partially why the global stock market is in more or less a stable situation. And if we don't get any more really bad news, that's where we're probably going to be for a while.
Well, a sector that's less than stable has been oil prices, which have taken a massive hit. Russia and Saudi Arabia postponing a meeting they were supposed to hold today to talk about cutting output. They've put it off till Thursday. Tell us about those talks and where you see oil prices going from here.
Okay, well, basically because of the COVID situation, nobody's going anywhere. And not only the automobiles, but the airlines have reduced their travels considerably. So the oil demand is really down substantially. And the production agreement between OPEC countries and Russia is about to run out. And both countries have threatened that they would increase production, which will mean more excess demand and lower prices. Now, talking about it from the OPEC and Russia's point of view, their best response is probably going to agree to a production cut so that they can keep prices somewhat high. You cannot run the prices up too much because there's no demand, but still control demand so that the price will be a bit higher than it would be. But from the individual country's point of view, not necessarily with the OPEC and Russia together, but from the individual country's point of view, because of the uncertainty with the COVID, they would want to have as much cash as possible. That means they would want to pump out production. So basically, during this meeting, we'll have to see whether the individual country's nervousness wins out or whether the desire to have a control price and do probably the best option for OPEC and Russia collectively wins out. We don't quite know what's going to happen yet.
And briefly, Professor Yang, coming up this week, what's on the schedule? What should we be watching?
Okay, well, the Korean government statistics to be announced this week includes the current account, government budget trend, 2019 capital flows, as well as the March financial market characteristics. And then there's the first meeting of the Security Stabilization Fund. and the Monetary Policy Committee meeting this week as well. Normally, this would be quite routine, actually, but because of the COVID virus and because of possible freeze-ups, credit crunch in the financial market, all these meetings, all these statistics have taken on more meaning than usual, especially the latest statistics from March. Will be really looking out whether we could see traces of the effect from COVID virus here. Because in a sense, at least in terms of economics, the COVID virus really hit us very quickly. So very few of these were reflected even in the February figures. Now, for the United States, the oil reserves, for the reason that we talked about in the last questions, that would be a very interesting statistic to see, especially how the shale oil production is going. And then this week's unemployment request, employment benefit request, we'll have to see whether, we had astronomically high numbers for the last 2 weeks, and we'll have to see whether that is going to grow or maybe hopefully it'll stabilize, but it'll probably grow.
Well, it should be interesting indeed. All right, Professor Young, we'll have to leave it there for today. Thanks for sharing your insights.
Thank you.